We have had lots of investors in commercial real estate who have come in and said that this is going to be a crisis point, that the government is going to have to step in, that something should be done because there are so many commercial real estate loans that are coming due between now and 2025, and that they won't be able to get credit from the banks in the same way to renew or to, once those maturities come due, to refinance.
Well, let's say they lose $100 billion in the banking system. Most of the banks can take that loss, their share of that loss, and a few of them, because they did other things, their shareholders will end up losing the money, but the depositors won't lose money. But if you lend money to somebody and it comes due and they can't pay, the old story about the banker, I never made a bad loan. Of course, some of them turned bad after I made them. I mean, and that's exactly what happens in, whether it's in commercial real estate. And if money rates are 2%, or we were lending money out at 4 basis points at Berkshire to the federal government, not much more than a year and a half ago, or something like that. And if those rates change, let the person who bet that they wouldn't change lose money. I mean, that's if you make mistakes in business, plenty of people make mistakes. You pay for them. If you've got a big profitable business on top of it, which a good many banks do, you take your losses and you keep going on. I mean, banks can take a lot of loan losses, but they can't take something that wipes out their capital and expect the world to ignore that fact.
Meaning that you don't think anything needs to be done on the commercial real estate front?
Well, I think that the people who lend too much money should take losses, and they're getting properties handed back to them now. I mean, within the last month or 6 weeks.
Banks are.
Yeah, I mean, they got some office buildings in Los Angeles, and Blackstone walked away from something. I mean, and if you get a non-recourse, everybody goes in the real estate business is told the first rule, the second rule, the third rule is never sign your name to anything. And so you have non-recourse mortgages, and they're going to walk away, and the bank's going to get stuck with losses, and maybe they'll hold the property a long time, and it'll come back. And there's all kinds of ways that if you got capital strength, you may decide, well, I'll just hold it. But that money is sterile for quite a while, and that's part of banking. I mean, you expect to lose some money in banking. It's not a sure thing on every loan, and you build that into your calculations, and then you have capital that protects your depositors from it eating into their money. And if it does eat into their money, then the FDIC, which is in effect really a mutual insurance company of a very peculiar sort, essentially spreads the losses among the continuing banks by higher FDIC assessments in the future.